think we can start. First of all, thank you for joining us today, for being here. We appreciate that. We will be talking about DeFi yields or everything connected to that. And I suggest that, well, of course I have a list of questions, right? But I think that it's better if we just, discuss anything we want. And if you feel that you want to jump in, please do, because I think it's better to have a discussion rather than structured questions and answers, right? So, first of all, let me introduce myself. My name is Andre. I am CMO and CBDO at Stonfi. Stonfi is the leading DEX on the Ton blockchain. And guys, please introduce yourself, tell us what you do, and if you want to add anything to your introduction, like what do you think about yields to start with, DeFi, maybe you have some ideas that you want to throw in, please do.
I can start introducing myself. Hello everyone, I'm Marco. I'm the co-founder of TAC. What TAC is basically an EVM extension for Ton. And we basically complete the offering for developers that want to go live on Ton and Telegram, providing access to EVM developer to be able to interact with other Ton ecosystem dApps or asset or users as well. So we mostly take care about the low-risk DeFi on Ton, so onboarding like the more blue-chip protocols coming from Ethereum mainnet and assets, blue-chip assets coming from Ethereum mainnet that wants to tap into the Telegram distribution and the Ton distribution.
Hi everyone, I'm Shubham. I'm the head of ecosystem at Manta Network. Talking about my experience, I've previously worked with Polygon, Mantle, mostly on the gaming side, but then since 2023, I've been with Manta as a head of ecosystem. Talking about Manta, so Manta is a layer 2. Like initially we started as the privacy chain, then we shifted to modular ecosystem as a layer 2, but now as we know, like the layer 2 are too fragmented. So we are planning and we are discussing some products internally which can be launched, which can be revenue generating, which can have a product market fit, so that next time when I come on a stage, instead of telling you I have a layer 2, I can just explain you what my product is. Thank you.
Hi everyone, I'm Ran, co-founder of Orderly. We developed the world's first perps DEX launchpad 9 days ago, which is you can launch your own perps DEX with your own brand, colors, logo on us in a span of 10 minutes without writing a single line of code. It's live on 18 different chains, multi-collateral, 130 different perps markets, deep liquidity. And since we launched 9 days ago, it's about 1,000 perps DEXs launched on top of us since then, including memes, KOLs, projects, all types of communities. So welcome to try it out, dex.orderly.network.
Cool, thank you. My name is Konstantin. I'm a co-founder and CBDO of Paybis. We're 11 years on the market, and our main goal since day one was to make crypto simple for people. So our mission now is to bridge the gap between Web 2 and Web 3. Last maybe 5 years, what we all saw that a lot of centralized exchanges and wallets started to offer their customers to buy their crypto inside their applications. So what I see right now, the next shift is happening where DeFi projects starting to do the same, right? Because more and more DeFi projects are starting to target Web2 people, not just the same Web3 people that are migrating from one project to another, which is a great thing. And this is where I see we fit perfectly, because our product is something that you can plug in to your DeFi project and have your people start using your project through Apple Pay, bank transfers, and stuff like that. So normal fiat. And this is kind of amazing because, I mean, we only have about 7-8% of world population in crypto at the moment. We still have a lot to go. A lot of more people will come, and we are helping them to make the first step, because as we know, the first step typically is the most difficult one.
Awesome, thank you. I have this question. So the title of our panel implies that there could be some yield, or some value beyond yield in DeFi, right? So do you think it's actually possible? Is it a valid question? And so we have different products over here, actually, because we have infra products, we have consumer-facing products, and it means that even yields, or what we think when we're thinking about yields, it could be different in your products. But traditionally, I would say that usually when you hear yield and DeFi, so you hear these two words, usually you start thinking about some incentives, right? Which could be quite often short-term. And I understand that in our products, these could be different because these products are different. But if you have any incentives in a product which you provide to your users, do you think that these kinds of products can exist without these short-term incentives? And is that even a valid question? So let's think about ideology behind that.
I can start.
Let's do
So, what I always kind of try when I'm trying to explain crypto space to Web2 people who are not yet into crypto, everybody can understand like trading on exchanges, wallets, and so on. But when I'm trying to explain that, look, guys, there is so much more in DeFi space. This is where it gets complicated, right? Because staking, yield, swaps is just one of many different type of applications you can build in DeFi. And what excites people the most, right, that you can start creating interesting projects and delivering value to your users without like getting study for 10 years, right? So you just need a little bit of coding skills. Now with AI, you don't even need the coding skills, right? So as soon as you imagine something and you want to build it, it's so easy now to build in DeFi. For example, if you, now with Orderly, right? You can just build your own DEX, as I understand, very quickly. DEX can be your primary goal. Maybe it will be just a supporting product for your other features that you're building. So I think there is much more value in DeFi space, and we're just scratching the surface, because when you build a tool for people to use, then when it explodes, right? Because we cannot still maybe imagine all the use cases that can be in DeFi, but we need to build tools for people to create projects using these tools, and then we'll see, I think, a lot of interesting stuff. The same that happened with AI. AI appeared, people are doing so much things that they were not able to do before. I think the same will happen with DeFi.
Yeah. I can go next. So the first question was, is this yields actual and is it valid, right?
Is it a valid question?
Okay.
Beyond yield?
I specifically think, let's say, the more developed a country is, the yields you get in the financial TradFi side, right? The more underdeveloping countries, it's the more yield you get because the bond rates decreases, the credit rating decreases. So let's say if you get a 20% yield on your saving account in your bank, so why would you come to DeFi? That was the first question. Why we need DeFi? Because let's say right now, if I can earn a specific yield, which is actual money, not if I'm going to launch a token in future and I'm giving you incentive, that doesn't make sense. But let's say if I can actually give you a number, if you invest like $100, I give you like $130 at the end of the year, apart from the incentives and tokens. So that is a good yield, not just for us, but also for the institution. So that is the reason I think so, like all these big players coming in, like BlackRock investing in BTC, ETFs and stuff. The reason behind that is not that they want to hold these BTCs and ETF. It is more about the arbitrage opportunity between it. So let's take an example. So if BlackRock holds 100 BTC right now, and they have a ETF fund, which is 1:1 on the BTC side, whenever these BTC go up, they just buy whatever they hold over here in the index fund, they just go and sell over here. And whenever this goes down, they just come and buy from here and sell over here. So this is the opportunity which they are capturing. We all see it as a ETF for the mass adoption. It's more about the arbitrage between all the index tokens and all the native underlying tokens. So this is one of the important things which also market makers were doing in the crypto industry. All the HNIs and other things who have a lot of money were trying to capture the arbitrage between it rather than just holding the tokens and getting the specific yields or a token of a particular project. So I think so, like there are a revolution right now where people are shifting from the infrastructure, just like many chains are doing that. They go focus more on the product side, which can actually bring more value. Either you make money from people who are willing to pay for it. So let's say Uniswaps. People are actually willing to pay for the gas fee. They are willing to pay for the transaction fees, even though if it has some slippage. Let's take an example for a chain. People are paying a gas fee, but that doesn't make you revenue that much, right? So I think so every chain will have a follow-up model where they'll have a product which will be related certainly to a DeFi, where people can actually earn some money, and then it goes back to the chain revenue. So now, like as I mentioned you on the backstage as well, that we are creating a product which is majorly focused on the arbitrage so that we can earn some real money out of it, which is what other like Goldman Sachs and others are doing in the Web2 side. So I think the yields are actually important, or else it is not attractive for me to download MetaMask and go ahead and use these other applications. It's better for me just to go ahead and use all the Web2 application, which is actually organized and governed by a country or a government, so that in case something happens in future, there is a rug pull. I can blame someone that you did this to me instead of just taking all the custody. So I should have an incentive for taking that custody, and that is what DeFi yields are giving. Right now, I know a lot of like people are getting the yields based on the farming points, but maybe there are some other yield pools as well which are actually giving out the money.
Okay, thank you. Guys,
So-
please jump in.
Yeah, if I can, coming back on a more philosophical point, yield is by far probably the best direct product of DeFi.
Okay.
But if you want to look further, like there are many indirect value that also contribute to the yield formation. Like for example, giving the ability to do and join financial activity in countries that are not allowed to do. You know, like for DeFi, it doesn't matter where you are from, how much you have, you can participate in the value creation. Just providing liquidity, for example. And that's also a streamline of the user experience. Like if a new user comes down today here and wants to swap some token, needs to be KYC done as a trans exchange, right? With the DEX is straightforward.
Yeah,
Permission
correct.
as a user. So there is a value coming from the user experience, from the possibility, the democratization of the access of the value creation with financial product, but the core product keeps being the yield. And the yield is also coming out of activity that happens in DeFi. So that's where you have incentives coming in. Because in a way to attract the capital that is used to generate yield by user doing swaps or people borrowing money and things like this, you need to attract this capital. So incentives is like your marketing weapon that let you compete with other 200,000 DeFi protocols that are out there that are competing for the same capital in the end. So incentives are something that are not long-term, non-sustainable, but for sure it's like a sort of a mandatory step that you need to have in a way to bootstrap an ecosystem.
Okay. Just to start flying, I would say, right? Okay. Ram, do you want to add anything?
I think it's well covered, but I think all of finance actually will move on chain. We do see that already happening, and for us, we found product market fit in like permissionless DEX creation. Also, like we have a yield vault, and the interesting part about that is it links up to orderly smart contracts and also to Cefu, which allows the vault manager to like quote on orderly and hedge on Binance via the mirroring, and we're getting 20% plus APRs, very stable yield. That's kind of a CDFI play with all the yields going back to vault depositors. I think so we haven't given out any incentives for a while to users, and it's purely these products that are attracting them, whether it's trading or yield. I think it just on-chain kind of asset management yield or trading is way better than in the traditional sense, much faster, cheaper, more transparent, right? I think it's just an obvious thing. It's kind of like stablecoin is a huge product market fit as a 10x improvement on remittance. I think DeFi is, as the UX gets better, it's also a 10x improvement on TradFi. And I think that it's obvious that all of finance is going to move on chain.
Thank you. So you know what's interesting that quite often when we see these two words, like in a sentence, let's say it says yield and value, quite often we like think yield equals value or value equals yield. Although when we are speaking about that, so you were speaking about democratization, about UX and all this stuff, and basically I believe that we can, it'll be safe to say that value is not just the yield, because we started using these words like democratization, let's say. So people in some regions can get access to this stuff. Even though, well, of course they do that to earn something, right? But I mean, quite often just this access is value. So, and that's the main point. And I totally agree with you about the incentives, that they can be used wisely when you're starting, because, well, sometimes it's just a step that you need to take, but then you need to find different value, like what we discussed. Okay, but I heard the word stablecoin. What do you think? So we have DeFi, like the first word. The second word is stablecoin, and we know that stablecoins is like it is the thing now, or one of the main things, right? So how do you think? What role do stablecoins play in DeFi currently? Please
I can
start.
go. I
Okay.
can go. It's okay. So I would like to highlight the point which Marco mentioned previously, the accessibility, right? So let's say if I am in a country where you don't have access to anything, and let's say if I have stablecoin in my MetaMask, I can easily use it across the world to get my salaries, to pay someone, to off-ramp it, to do OTC, anything, like whatever you mentioned. So
But it's
it
not
doesn't-
DeFi, right? So
Sorry?
But it's not DeFi.
Oh, it's not
Meaning
DeFi.
like it's a like general use case for stablecoins,
General,
which is
yeah.
understandable.
So,
but what about DeFi?
So specifically on DeFi, I think so like one major use case which we have seen right now was about the RWAs, which are giving you yields, which can be used across the DeFi. So I've seen a lot of like people shifting from USDT, USDC to yield-bearing stablecoins, which is a part of DeFi. But I think so like it is more on the RWA side. But yeah, so apart from that, on the stablecoin specifically, there are a lot of pools which are helping out right now to get the incentivizing. I've also seen one interesting thing which we have all also seen, like everyone has launched a token previously. So initially all the tokens which were launched were majorly backed by their own tokens, or the incentives were backed by their own tokens. But recently, stablecoin has been the major power where all the yields, all the incentives and everything goes on that particular side. Apart from that, I personally feel that recently all these chains coming around, like the stablecoin chains, will actually bring more value on the like the incentives. It will be more value in terms of adoption. And like Paybis is doing like off ramp and on ramp. That time the major value comes from the USDC, USDT, and ETH as a pool.
Awesome.
But I think also the main value in stablecoin in DeFi, like back in the days when it all started, was that people can trade and fix their profits. Right? Because on centralized exchanges, they could fix the profits against euro or dollar, right? Then USDT came up, and USDC came up, and now it's used a lot also in liquidity pools. So people create new tokens, liquidity pools against stablecoin, so people can trade and they can fix or get out of specific token, keep their money in stablecoin, wait for the next trade, or maybe decide, okay, I want to continue trading with this capital, or for example, I want to stake that specific
I
amount.
agree with you.
I mean, this is what I do personally, right? I always
Yeah.
have some stable coins because if there is a hype, like Aster, for example, I bought Aster with the stable coins that I had specifically waiting for the next interesting project that I will see.
I may be bold with my sentence, but I believe that DeFi without stablecoin cannot exist.
Why?
Because stablecoin, like DeFi is all about risks, right?
Yep.
And stablecoin is about de-risking everything.
Basically the same. Like then you need to like
Yeah.
get a profit, right?
I mean, it's not just about getting a profit. It's just about having some risk factor that can be narrowed down at some point in a strategy. Like the entire DeFi ecosystem works about this, right? The yield comes from activity coming from other user, but then you need the de-risking part of that comes from stables. And of course, that's also the reason why the most important stable are the one with higher network effect, because are the one with lower risks as well.
Awesome. Ran, I have a question to you.
Yeah.
So you are building an infra project or infra product which other companies can use, right? So what do you think, is there any risk for you that end users don't know your product? So they actually use some other application, you power this application, but users don't know anything about that. May it happen? Is it a risk for you? What do you think about that?
Right, so we're kind of like the Shopify for DEXs. The people building they can spin up a DEX in 10 minutes without any code. I think that's a huge unlock for creators, KOLs, communities, because they often don't have the capacity or the team to create a product, and it takes a lot of time and money. So we allow them to do that very quickly and very low cost. And they can choose to put like a Powered by Orderly logo on the product if they want, but it's up to them, right? I mean, ultimately, we're trying to bring value to them, to empower them, and then that brings value to us. So I think it's just about giving value to people and giving them what they want. I think, I mean, through this process, I mean, there's 1,000 DEXs that got created in 9 days. So people do end up knowing about us in some form, way, or another. So
Would
yeah,
you,
I think that's the...
would you incentivize those projects who use your brand, building their own DEX with like, I don't know, extra value?
No, I don't think it's all that needed. You know, we haven't actually given any incentives throughout this whole thing. So it has found product market fit, I believe, and then we're just iterating very fast on the product because it's not that smooth yet. I think throughout the process, people find out about our brand. Like we power Radium perps, WooFi perps, QuickSwap perps. A lot of people don't know about this, and now like meme coins like Baby Doge, Peanut, their perps all powered by the same order book. So, I mean, I think people end up knowing about us at some point, one way or another. It just doesn't have to be. We don't want to force anything on the builder themselves.
Okay.
I think
you can have the same question because it's
Yeah,
actually
yeah.
quite similar, right?
Yeah. Like, I really think it depends in the end of the day. It depends if the infra provider is able to create a value accrual
Okay.
back to what is the token in the end, because we are in this business, like our fundamental metric of measure is our token in the end. So if the infra provider is able to accrue value back to the token, it's not at all necessary to be present capturing the value from the user. Like in our case, for example, ton user, they don't even know the tag exists.
Yep.
When you use Morpho, when you use, I don't know, OLR, or when you use other EVM dApps that we onboarded on Ton, the user send a transaction on Ton. It uses a Ton wallet, it pays fees with Ton. And it gets whatever is the return from the dApp, like, I don't know, borrowed money or another token for a swap, without even noticing that he's interacting with an EVM chain that is like connected to Ton but separately. And that put us in a completely like hidden mode. But there is a form of value accrual that fall back that actually makes our token to actually be like not like a down-only token, if you want. You know, so that for me is the most important part, rather than being on the front and marketing and things like this. Then, of course, you need the community around the token to make sure that that there is some awareness about the token as well. But that comes in like in a separate discussion. It's more about marketing and community activation and things like this.
Okay, but still, to put it short, so do you think that it is a risk for you, or you are fine with that?
So in our case, super fine. If there is no value accrual for the token in the infra provider, then there is a big risk, yes.
Okay, guys, it seems that time is up. Is that so? We can continue. I don't know. There's the time over there, but nobody's stopping us. Should we wrap up? Okay, thank you. I actually had another question, but let's put it very short. So I wanted to ask you about regulation, but probably Konstantin is the best person to address this because you provide on-ramps and off-ramps, which is like the thing which is regulated.
Yeah.
So what do you think about that? Speaking about DeFi, so should be DeFi regulated or not? What do you think?
Well, the thing about regulation that it's always about consumer right protection. Right?
Okay.
So people can trust centralized exchanges like us and everybody else that they will get the service they want. The same happens with other industries, banks, Airbnb, Uber, right? So as soon as more people will start getting into Web3 in general, the more regulation will follow. Because as soon as people start complaining that, I mean, we have a lot of issues in Web3.
It will. But the question is, do you think it's a good thing?
It's like the coin is two-sided. It's good for adoption because more people will trust it because it's regulated, but it will be more complex for existing people to use it and for businesses to run it. So it's like, catch-22, more or less.
Can we say that it is evil, but we need it? Or it's a good thing and we are fine with that in DeFi?
I think we will still always have some parts of DeFi which is not regulated, and it's good to keep it like this, right? Because it's easy access to DeFi for any person around the world, because they can just start without any bank accounts, KYC or whatever. And we still need it for innovation. People need to innovate. They need to have a quick access to innovation. But those parts of DeFi that, for example, staking, right, where it will become like significant value of money that can impact real economy, regulators will come sooner or later. Like they came with Mika in Europe after like 8 years, right? Because the first law was proposed like back in 2017 or 18. Then it went through all the European parliaments, blah, 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 and now it's live. And now again, a lot of years, given like 2-3 years for implementation. So I think in several, maybe next to 5 to 10 years, we'll see regulation will also catch DeFi space.
Okay, we'll see, we'll see. Unfortunately, we have to stop now. Although
Thank you very much.
we could
was a pleasure.
continue. Thanks a lot, guys, and thank you for joining us. Yep.